Welcome back to the final round on Yahoo Finance. I'm Seana Smith. We're shaping up at the last 30 seconds of trading. Dow, S&P, and NASDAQ all in the green. The Dow up just around 0.2%. S&P holding on to gains, and the NASDAQ was the outperformer all day. Seems to be right now as we head into the close, with it up just around 0.3%. And that does it for the trading day today. Again, all three of the major averages closing in the green. It was a pretty volatile trading day when you take a look at the range. The Dow swinging in over 500-point range, closing to the upside, though, up just over 50 points. The S&P up just around 0.3%. It's been a very volatile past couple of days. The S&P has traveled in a 100-point range over the past 2 days. And taking a look at why we saw a bit of a turnaround this afternoon in the market, it was led by a lot of those tech names. Now, they are closing off their highs of the day, but Amazon, Apple, and Google all up just around 1%. Facebook also looking like it eked out some gains there. Goldman, it was a top performer in the Dow, up just over 4%. It looks like UBS upgrading the stock to a buy, saying that the potential election volatility could help the bank in the fourth quarter. And investors are really digesting the risk that's out there in the market. So concerns about the pandemic, a contentious election. We got that weaker than expected reading on initial claims this morning, rising week over week, coming in at 870,000. So some signs there that the recovery in the labor market is stalling just a little bit. But it wasn't all weak data. Again, housing coming in very strong. We got that new home sales number out this morning. It was another strong report, a 14-year high. So of course it remains to be seen how much some of that strength in housing can offset the weakness in the other areas of the market. But I want to bring in my co-host for the next 30 minutes, Myles Udland. And Myles, when we take a look at the market's action today, it almost seemed like the market was searching for direction for most of the trading day. Stocks did though stabilize just a little bit, but what do you make of the action and really the volatility that we've seen in the market?
Yeah, I mean, I think it's now becoming a more consensus view, and part of it is driven by look, we don't need to get into how consensus is formed, but the fact that the election is now, 40 days away from right now. And so you back out the weekends, you really only have, 30, 35 trading sessions before you get to that. Many Wall Street banks are out talking about there will be, uncertainty around the election, contested, however you want to phrase that, but that November 3rd and November 4th don't necessarily deliver us an answer is a scenario that more people are braced for. And you look at the S&P right now, below its 50-day, above its 200-day moving average. In that kind of territory, you are going to be looking for direction. You are going to feel directionless, I think, as a market more broadly, because you've broken the intermediate trend. You haven't yet tested the longer-term trend. And so this is sort of the market we have right now. And it seems likely, because, again, that November 3rd date is coming up very quickly, that we're not going to get something like resolution before that. So whether this correction is some kind of long, doesn't matter how long it's drawn out or how steep the correction is, it's now a corrective phase for the markets. And it's really about the answer we don't know and can't know for some time, which is going to be who the next president is. After that, we can figure out where we go from there. But with a market, again, that sits below or sits between those two important moving averages with these kinds of outstanding questions, this is kind of the market we have.